Right. Welcome again, guys. Still proceeding with Bootcamp session 2 for AUI 3702. And this is video C for the first semester of the 2024 academic year. So what were we looking at previously? We were just about to conclude with respect to this question 1 on the weaknesses issue. So now I was reading this last bullet point. I'm going to reread it again. At the end of each month, EFTs are made to suppliers once the trade payables control account has been balanced to the satisfaction of the accounts assistant. I'm not seeing any senior person here supervising the process. That's already a problem. But anyway, EFTs request is requested by the accounts assistant. What is the accounts assistant done initially? He or she balance the trade payables account against what? I think against the supplier statements. And then what does he do after that? Requests, right? The EFT transfers to be authorized by the financial controller. And then what else? And then what does he do? And returned to the accounts assistants again. So this transfer requests, they are authorized by the financial controller and then returned to the accounts assistant for what? For payment on the standalone PC system. Suppliers' statements are filled. So meaning to say this accounts assistant is the one effecting the payment, which to me is a big problem there, because that's lack of segregation of duty that I'm already seeing. Supplier statements are filed by the accounts department in supplier order. Now that's inadequate record keeping or record sequencing. Why? Because you cannot keep it based on the supplier order. You have to have some form of a sequential record entry for maintaining these things. You cannot just keep it on the basis of supplier order. So what order number is it? I mean, how do you know which one came first, which one is most recent, or which one has been there for a longer time? So there's a problem there. When received, now they are referred to in the event of a dispute with the supplier. That's the only time when they are referring to that. Meaning to say, okay, not meaning to say, but I've got questions already. What about the other supporting documents? Because if you just base your records on the supplier statement, what if the supplier included something that you never ordered in your supplier statement and they're expecting a payment from you? That's just food for thought. Problem area number 11 here. So now let's put down these things in perspective. Do you see that we have more than, I think it's more than 8, if not 10, weakness statements that we've identified from the very first bullet point up to this last one, which is bullet point 12. But of course, I regarded that is problem area number 11. We've got a lot of weakness statements that we've identified. Now, if let's put this last one here together. So the first thing I can already see is lack of segregation of duties in the accounts department. Why? Because the accounts assistant, is actively involved in the balancing of the trade payables accounts balance. That's number 1. Initiating EFT requests for payments to suppliers. What else? And effecting the actual payment to the suppliers themselves. That's the weakness there. That's the first. I'm writing it in full, right? So that's the first weakness I can already see just from this problem area number 11. Number 2 weakness, it had something to do with, actually there's inadequate authorization of EFT payments. All right, inadequate authorization for EFT requests, as this function should be performed by at least, okay, now that's what you put in the recommendation, where you say that the EFT authorization should be performed by at least 2 signatories before a payment is performed to a supplier. That would be the recommendation. But then the weakness is inadequate authorization for EFT requests, as the function is only performed by 1 designated senior personnel. And then in brackets, that's the financial controller. But this should have been done by the accountant anyways, or the finance manager. Okay. Then, okay, so you have to think of the potential effects. And then the recommendation, as I stated, just to be like this. This is where you say that the authorization function, or the, authorization function over the EFT requests should be performed by at least 2 independent senior personnel before payment is effected to a supplier. All right. Another thing you can add, I'm not going to write it down. So the authorization of EFT requests should only be performed after appropriate verification and matching of supporting documentations have been done. That's the only time when the authorization of EFT request is done. So what should that person do? Match the supporting documents to the supplier statements, the invoices, goods received notes, purchase order forms, supplier delivery notes. Once those documents have been matched and they agree together with the supplier statement, that's the only time when you authorize that EFT request. Why? Because you know you're paying for goods that were ordered, number 1, goods that were actually received, number 2. So the goods actually ordered is confirmed by that copy of the purchase order form. Goods actually received, it's confirmed by 2 documents, the supplier delivery note and the goods received note. Those 2, they, to a great extent, they actually help you to confirm that. But also, you know, the supplier statement itself, it's sort of like acts as another confirmation document to what you are about to effect payment for to the supplier. Because otherwise you end up paying for goods that you never ordered. So in this case, I'm also seeing no matching of documents. That's another weakness you could have mentioned. So that would be weakness number 3. No matching of supporting documents performed before any authorization of EFT requests or payments to suppliers. There's no matching here. Because what is this person, the financial controller, doing? The financial controller just receives the request from the accounts assistant and then simply signs or simply authorizes the thing. And then the next step that happens is they effect the payment. No mention about upon receiving the request of, the EFT request from the accounts assistant, the financial controller verifies the request by matching the supporting documents against the supplier statements to confirm validity of transaction payment, you know, or to confirm validity of amounts before effecting the payment to the supplier. None of that is taking place. So that's what I'm trying to say with that weakness there, right? So guys, are these things making sense? And do you guys have questions about this? Questions? All right. Are we clear? Do you guys understand? So if I'm to give you guys a question right now about weaknesses and I say, guys, identify weaknesses here. Let's do this as an open discussion. Are you guys ready to do that? Because a question about weakness statements, it's going to come in the exam. That's for sure. So if you get a question on weaknesses, are you comfortable now? That's my question.
Yes,
I'm getting there.
To a greater extent.
I understand.
Okay. So my advice to you is this. Look for at least one assignment, maybe for last year, where they are testing about weaknesses. Remember, there's a solution for that. Try to do that assignment question where they are only testing about the weakness. Just do that. And this is my homework to you, right? Try to do that under exam conditions and mark yourself to the solution. That's one of the other ways you can test to see if you are really understanding what is going on. So now, guys, as far as weaknesses, we seal it off here. I'm moving to other things. Is it okay now? I'm moving to other concepts.
Perfect, sir.
All right. Today, I want to try and touch on two things: audit objectives and audit procedures. That's what I want to introduce you guys to now, and we'll proceed further with it tomorrow. But let me try to introduce you guys to that. I think it's important that we cover that as well. Okay, let's see what's going on here. Just give me a second. I want to try and open my notes on that so that we can do the discussion shortly. Okay. All right, let's look at this one here quickly. It's opening shortly, guys, and then I'll discuss this briefly, and then we look at a question, which is this one. I'm gonna start with audit objectives and then get to audit procedures afterwards, because I want to finish with question one for this 2023 paper and then move to another thing. Okay, there's this audit procedures. Let me look for audit objectives. Audit objectives, where is it? Why can't I see audit objectives here? Oh, there it is. Okay. I used these notes when I was doing my honors and found them very, very helpful, by the way. So that's one of the reasons why I'm taking you guys through that. Now, how to formulate an audit objective. So this is a compilation by your lecturer, actually. So it's not really my material resource as such, but I found it very useful. Hence, I'm trying to direct you guys to it as well. So an audit objective, in simple terms, it's basically what the auditor wants to achieve, or it's a goal of the test of control or audit procedure carried out by the auditor. That's what an audit objective is. What is it that you want to achieve by performing an audit procedure that you are carrying out? If you're observing people, maybe observing employees as they are clocking in and out of the company premises, why are you doing that? That's an audit objective. That intended purpose that you have for whatever you're doing to try and gather evidence, that's the audit objective. Now, with the audit objective, the analogy is in the way they want you guys to present it. So there's a certain way of writing down an audit objective accurately. Now, there's a difference between an audit objective and an audit procedure. The two are not the same. They are completely two different things, but one is part of the other. Like, for instance, audit objectives, you find them in the audit procedure statement. But an audit objective is a standalone, it's something else independent, okay? Right, so now I wanna start off by explaining an audit objective in the sense of how they want you to compile the audit objective statement. So your audit objective statement should be drafted as follows. This is what you should be able to do in the exam. Audit objective statement compilation. Right? How do they want you to draft an audit objective statement? Number one, you can start your statement by saying to determine if, or to determine whether, or to determine that. And then the next thing you do, you explain the objective goal or the objective test. Full stop. Number two, you can also write an objective statement by starting your statement by saying to ensure if, or to ensure whether, or to ensure that, and the next thing you do, you explain in detail the objective goal or the objective test. Full stop. I'm not limiting it to that. There's another one that I used, and I just tested this. It was one of my assignments at honors. So what I did is I compiled my objective statement by saying to ascertain if, but normally it's to ascertain that, you know, and then and that's why I compiled this. So I say to ascertain that, and then I explain the objective goal or the objective tests. Full stop. That's what I'm showing you now. It's everything you're gonna see anyway. This other too much explanation, it's not necessary, because what they are looking for when they are marking your script is this. Did you use the correct terminology? Did you explain the objective goal or the objective test? In other words, the intended objective test that the auditor was seeks to achieve. If you did, you get your full marks. The moment you miss it here, like for instance, you don't use the word to determine and you say something like to check or to see, trust me, you lose marks. So here are the don'ts. So what I've shown you, those are the do's. What I'm about to show is things you should not do. Okay? Things you should not do. Never write your objective statement like, for instance, to check. And then explaining the objective statement. Trust me, the moment you do that, you get 0. Don't start your objective statement by saying to see. The moment you do that, you get 0. Don't start your objective statement by saying to observe. The moment you do that, you get 0. Why? What you are giving them when you say to check, to see, to observe, those are audit procedures, guys. These are actions you carry out when you want to collect audit evidence. That's why they are strict when it comes to this. So now, okay, let me just show you. So the same things, just to validate what I was explaining to you is here. So an objective should focus on the results rather than on systems and practices. It should be presented as a statement in the following format. The objective of the audit is to ensure, to determine if, whether, and then the objective should not be phrased in conclusive manner, such as assess the extent to which you don't do that. As this does not lead to a clear conclusion, because assess the extent to which what? Just keep it simple. To determine if, to determine whether, to ensure if, to ensure whether, to ascertain if, to ascertain whether, to ascertain that. Simple as that. Then you know you're on the right track. Now, the following are possible examples of the outcomes which an audit objective should achieve. Proof of occurrence. So you see that part when I'm saying explain the objective test or explain the objective goal. Those are what we call assertions. Assertions. Now, assertions can be to test for occurrence, confirm completeness, classification, existence, accuracy, valuation and allocation, all those things. But when you are writing the objective statement now, you don't just simply say, yeah, to determine whether transactions are complete. How do you mean to be complete? How? So yes, you have to write it like to ensure or to determine whether the transactions for the what financial year have been recorded. All the transactions for the 2024 financial year have been recorded. When you write that, what are you testing for? You're testing for completeness. Are we together, guys? Let me just show you with an example here below. Do you see what I was talking about? To ensure what? That orders are only accepted from valid account holders. What is this? What are you testing for? You're testing for accuracy. Question on audit objectives. The following are risks. Okay, so sometimes they can give you risks and then they ask you for audit objectives. Sometimes they don't give you risks, but they still expect you to identify audit objectives. So like in the context of the question that we have, we were not given what you call this, we're not given direct risks from which we can be able to draft audit objective statements from. So what you do is, remember, because of the weaknesses that you've been identifying and the potential effects, you can just check for 1 or 2 from there. Remember the 1-4? So you can check maybe any one of the 6 risks that you've identified. And from them, you can be able to draw your audit objective statements from that. Do you see how simple that can be? But when you write your audit objective statement, please make sure to put an assertion in front. So if you're checking for validity is accuracy, that's what validity is. Completeness, so you just need to make sure that you write the assertion in front, then, or you can write it at the end. Most of the times you can even also write it at the end, you'll still be correct, but just make sure you put down an assertion, just exactly the way it is presented here. But even if you don't write the assertion, you'll still be correct, all right? So it's not a train smash if you don't write one, right? So I want to come back to address this question 1.1. That's why I was showing you those notes about audit objectives. Now, with reference to the purchase system, what do they want you to do? Compile 4 audit engagement objectives. Now, it is with reference to the what? The purchase system, meaning to say your audit objective statements can emanate from any part of these bullet points that we have identified. So I'm going to read, for instance, the first bullet point, and then I would ask you what can go wrong there. If you can identify what can go wrong there, then we can even be able to draw the audit objective from that. Or even without identifying what can potentially go wrong, it's easier to tell, okay, why they are doing what they are doing. It's because they want to achieve this and that and that and that. That's exactly what they want you to write down here. So I'm going to read the first bullet point again, and then we will try and see if there's an audit objective statement that we can draft from that. Inventory records for raw materials are what? Are maintained on a shared standalone PC system. This system is updated by an inventory clerk each time an inventory item moves. So they update the inventory items, isn't it? Right. Issues from inventory are only made and recorded in response to a production order. Right. My question to you would be, what can potentially go wrong there? In other words, I'm asking for a risk. If you can identify a risk, you can be able to then to understand what the objective of this action that they are doing is all about. So effectively, what can you guys see there? What can go wrong here? That's my question. Goods could be produced without an accompanying production order. It's possible. But then they have a control measure to try and to address that, which is to say, every production order, every production of goods that takes place, it has to be done on the basis that there's a production order that has been received. So what is their goal in this case for using production orders? Hello? What is their goal? Is to ensure that what? Only authorized productions are conducted by the manufacturers of those cosmic cosmetics limited entity. That's it. Because what is it that authorized production of the goods with third party? It is the production order. So the objective is to ensure that all production of goods performed by the third party manufacturers have been appropriately authorized. That's why they are using those production orders. Otherwise, if there's production that takes place and there's no production order accompanying that production of goods taking place, it means that production has not been authorized at all. So the objective, if I'm to write, okay, let me write it down, I think, to make more sense. And why I'm taking it from any bullet points is because they said the audit objective should be from the purchasing system, meaning to say it can emanate from any one of those bullet points. That's why I'm saying that you can pick up the audit objectives from any one of these bullet points. So the first one from here is to ensure that the production of goods have been appropriately authorized That's it, to ensure that the production of goods have been appropriately authorized. Why? Because we want to ensure validity of the production order, isn't it? So then the assertion you put there, it has to do with validity. If I go on to the next one, this production order is prepared by the, okay, they're still talking about the production order. Okay, it's prepared by the production controller. It specifies the raw materials to be issued to the manufacturer in order to enable them to produce the required finished product. 3 copies of each production order exist. Okay, still, this has to do with the production. So I'm not going to take anything from that because already I've mentioned already about the production order. Now, when the inventory clerk receives the production requests, he immediately updates the raw materials records, showing that the inventory has been dispatched to the manufacturer. So we know that it's possible that inventory can be dispatched to the manufacturer, but it may not be recorded, right? So the use of this production request is to ensure that the movement of inventory, to ensure that the movement of raw materials to production is appropriately recorded. See, or appropriately authorized anyways, because the production request is the one that authorizes movement of inventory. Otherwise, if there's no production request, no movement of inventory should take place, from the storage to the production department. Now, okay, so that's already what you call it, an audit objective from that. But I want to check for something else. Now, the inventory records do not state to which manufacturer they have been sent. Now we have a problem. The production request form is then, passed to the stores department where it is used as picking slip. Items are marked off the shelf as they are taken off the shelf. Once all the items are packed and ready for dispatch, copy T is okay, cool. So here it has to do with the movement of inventory. So the primary objective from this, it has to do with appropriate recording of the movement of raw materials from, or the transfer of raw materials from storage warehouse to production. That's it. So it's to ensure that the process movement of raw materials from stores to production is appropriately recorded. Inventory records are maintained. Or rather, let me say are updated consistently. Because I'm seeing that every time they move inventory, what do? They they update their inventory records, isn't it? Consistently. Now, if this happens, what does that mean? It means we have completeness. And not only completeness, but occurrence. So if I want to know that indeed there was raw materials that was moved, I must be able to see the production request in place. And then, of course, okay, yeah, it will be mostly primarily occurrence for this particular one. Guys, are these things making sense? You can also use to determine that the process of movement of raw materials from stores to production is appropriately recorded and that inventory records are updated consistently or regularly. Simple as that. Are these things making sense?
Yes, but I have a question.
Yes, please. Yes, yes. I love questions. Please go
Is there
ahead.
any for me to write the assertions on the side?
Yeah, you have to. But even
I
if
have
you
to.
don't, you don't lose marks.
Okay.
Yeah, you don't lose marks. Because remember what they asked? They asked for the audit objective. But it's just that, you know, why I'm putting assertions, because I'm just ensuring consistency to your lecturer's notes. She put there, so the assertions. So I would ideally advise you to put them. So I think maybe some of you might be lost in the sense of saying, what is assertions? Do you guys know what assertions are? It's a question. Do we all know what assertions are? Don't be shy, guys. This is the time to ask questions. If you don't understand something, this is the time to ask and get understanding before the actual exam. Do we all understand what assertions are? Okay, silence, I would presume everybody knows what assertions are. So we should be good. So I would expect...
Assertion
Yes, go ahead.
is those four that you mentioned there: validity, completeness, evaluation, and cutoff.
Not only those, there are more than that. So assertions, yeah, it's good you actually stated, you asked this. Assertions, guys, they are grouped into two groups. So there's assertions for transactions and records, which can be, let me try to, okay, can I give you a reference to this so that I don't dwell too much on them? Because it's, I mean, it's, you looked at that question of audit objectives, it's like 4 marks only. Can you still see my screen?
Yes, I can see, sir.
Okay, so I want to just briefly try and explain in short, and then I'll give you a reference, okay? about this. So assertions explains the objectives or goals of management. So one of the things that management want to achieve, it has to do, number one, with the transactions and the records that they maintain. They've got goals for that. There are certain goals that they will expect to see. One of them is that they expect that the transactions and the records that they are maintaining indeed relate to something that have occurred. That's occurrence. They expect that the transactions and records that they have in place are complete. That's completeness. They expect that the transactions and records that they've put in place relate to a specific accounting period. That's cut off. And that they are correctly presented in their financial statements. That's presentation. They also expect that the information that they've captured is accurate, and that's where accuracy comes in. Then there's other things, other goals that they have, and it has to do with account balances. Now, account balances, notice, is different from transactions. So with account balances, instead of occurrence, they'll be wanting to ensure that the balances that they have has to do with something that is in existence. They also want to ascertain that whatever account balance that they have, it incorporated everything that have transpired during the particular financial year. That's completeness. Then there's accuracy, valuation, and allocation. There's also presentation, just to name a few. There's some I'm not writing down, but these are the common ones that you come across. That's what assertions is all about, in simple and short terms. All right. So guys, I'm gonna tune in again with you guys shortly in video D to deal with audit procedures. Are you guys still fit for that? Or should I take you tomorrow rather?